Let's talk Forex trade management. I want you to understand this is an audio message, of course, in a video. I don't have my face on here because you don't need to be distracted. This is something you might want to play for yourself over and over and over again. And we can talk a lot more about this. This is not the definitive audio on Forex trade management, but I'm going to at least get you started. Let's start off with just some ideas and concepts. One is there's no good and bad market. There is either being in the market and trading or being out of the market, not trading, maybe because you're fearful, maybe because you don't want to lose. I just made a comment in the group a little bit ago where I said, if you have Forex trade management skills, you can turn $100 into $1,000. Pretty simple. But if you trade based off of hope, if you trade based off of, well, I think it's going to go in my direction, I hope it goes in my direction, then you can turn $1,000 into $100. One of the biggest things in Forex trading is the fact that people don't understand how to manage a bad trade. 50% of your trades are going to be bad trades. What's a bad trade? I don't know, whatever you emotionally feel about it. I don't think there's trades I have to manage more, and there's trades I have to manage less. Yes, we use an automated system, and that lulls your average person who's truly seeking to get rich overnight or turn $1,000 into $10,000. Certainly that skill set is there, and you can earn it. But it doesn't just happen. Nothing just happens. You don't wake up one morning and on a yacht somewhere in the Caribbean when you didn't do anything, literally nothing, to get there. So let's talk about the concept here. Let me give you one way to teach yourself trade management. No one can teach you this. And in fact, one of the biggest just kind of horrible things on the internet, a mind virus, is all of these people teaching you all of the wrong stuff. Forget being taught anything. It's time to go learn it. You can download the MetaTrader app, you can get a free demo account, and you can just start placing trades. So I want you to imagine it this way. Indicators, throw them out. Price action, throw it out. Enter a trade. Well, which way should I enter? Doesn't matter. The market is random. There are no candlestick patterns. There's no double bottoms and double tops, hammer candles. There's no candle patterns. It's all some sort of kind of messed up human psychology that people want to believe in. So let's just approach this openly. Here's what I want you to do to learn and practice. Oh my God, you're going to have to do a little bit of work. I know. Hey, I have a really great algorithm. It's right a large percentage of the time. When it's not, your average want to get rich type of person, and I use that very loosely because people say, well, Terry, I'm not trying to get rich. Whatever the hell you're trying to do, which is some kind of weird thing associated with getting rich or making a bunch of money, it completely can be done. Hell, I do it. But I don't know if you will. I don't know if you will. You certainly can. I don't know if you will. Let me talk about a concept, and this is one of certainly thousands of ways to do it, maybe millions of ways, maybe an infinite number of ways. But let's make some kind of weird assumption up front. Let's say you open up your MetaTrader 4 account, and you look at it. You're on a demo account, you're practicing, and you're already in a trade. Well, how did this happen? Let's just assume that happened. You're in a trade on a currency pair. I don't care what currency pair it is. You're in a trade on a currency pair. You need to be able to manage that into profit. Now, how do you get yourself into that situation? Just open up a currency pair and hit buy or sell. Doesn't matter. Now, the one thing you probably need to pay a little bit of attention to, but if you're really good at it, it doesn't matter. You probably should pay attention to your bid relative to your balance. If you're not very good at managing a trade, even a trade that you get from me or anybody, my system's pretty damn good. But as I said, if you don't have the trade management concept, you pretty much, you're living on hope. And hope is really good at turning $1,000 accounts into $1 accounts. It's really good at that. It's really good at that. Could you turn $10 into $1,000? Of course you could. I shouldn't say it that way. Of course someone could with the skill set. So you're in this random trade. If you have a general set of rules for yourself, which you have to have in Forex, I'm just going to kind of make up some rules here, but these are the rules you need to think about. So we'll make an assumption. I'm in a trade on a currency pair and my bid is relevant to my skill level. You hear that? I'll say it again. My bid is relevant to my skill level. If your skill level does not exist and you don't know how to do something called hedging, hedging is a big part and can be a big part of managing a trade. Let's even call it a trade gone wrong. What's a trade gone wrong? Something that is against your skill set. So let's say you open up your account. You've got a $3,000 demo account. There's a 0.10 bid on a currency pair, $1, and it's gone against you by $100. So the account's $100 in drawdown. Now, most people, because they don't have the skill set, most people, they say, well, I think it's going to turn around. This indicator says it's going to turn around. I hope it turns around. And it has nothing to do with that. It has to do with your particular risk level. So let's say $100 drawdown on a $3,000 account is something you don't like. It's basically told you, and not really too desperately, but it's basically told you, the market has told you, we're going against your original direction. Let's say you're in a buy order that's $100 drawdown, and you're feeling some sort of way about it, meaning I picked the wrong direction. Now, that doesn't mean $100 drawdown on a $3,000 account is the wrong direction. But it does mean, if you don't know what you're doing, that hope's not going to help you. So we're in a buy trade, and it's $100 drawdown against you. And you say to yourself, maybe I chose the wrong direction. Because there is no right or wrong direction. There is either a trade that you are in or not. Are you going to get into trades that completely run against you? Hell yeah. Are you going to get into trades that completely go in your direction? Hell yeah. What do? When it goes in your direction, you take profit. When it goes against you, you manage either into profit, or what I like to do is I say, you know what? This has gone against me. I was wrong. Let's get out. I just went out. I went out because the chances of me getting into another trade and it going right into profit's pretty high, especially with my algorithm. That's kind of the whole point behind it. It's not taking my algorithm and just trading it and making all kinds of profits, and then one day the market runs against you, you have no idea what to do. That's pretty much everybody. I get it. I get it. The reason I'm the provider of this stuff is because I never quit. People quit this thing every day, whether it's in my group or other groups. They quit every day. People are quitters. That's fine. I'm not. That's why I'm the provider. Once you stop being a quitter, you can become a provider. A provider is someone that is so successful at it, they feel like, especially if they're a decent person, they feel like they want to take you with them. They want to help you. They want to see you succeed because they're succeeding. Do I want to succeed and hang around a bunch of people who aren't succeeding? I think you know the answer to that. If I'm succeeding, I want everyone around me to succeed. So we're in this buy trade. It's gone $100 drawdown against us. You want out. Here's one way to do it. It's a pretty good way to do it. It's not the only way to do it. This is one damn good way to do it. You simply hedge. If you're in a buy trade, it's $100 against you in drawdown. You know what? You feel like you chose the wrong direction. You immediately place an equal and opposite order. You're in a buy trade at $1 per pip. You place a sell trade at $1 per pip. One of those trades is going to go blue, which is potential profit, and the other one's going to be red, which is potential loss or drawdown. Let's call it drawdown. I don't like to use the word loss a lot because if you manage it properly, you're not losing anything. In fact, you haven't lost anything by having a huge red drawdown in your account. That just means that you're using that money to trade. However, I digress. So now we have two trades, same currency pair. One's a buy order, one's a sell order. So we're hedged. That's what you call it. It's a hedge, an equal and opposite order. Let's say the hedge, because obviously your original trade, the buy order is not going in the right direction. Let's say the hedge starts to go blue. What's the market telling you? Just be logical. The market is telling you that the current price action is in the sell direction. So could I scale into another small trade in that direction that the market is telling me? I could. So if I'm in a 0.10, a dollar lot size on both trades, buy and sell, the sell trade starts going blue, I might, again, you practice this, I might add a 0.01 and maybe a 0.02, maybe a 0.03 lot size in that correct direction, which is what the market says it's going to do. If that continues, that sell trade and those scaled in sell trades, I should say sell trade hedge, scaled in, we'll call them hedge trades, because we're just trading in the direction that the market wants to go, can and will potentially, and there's a myriad of other ideas and options, but that, you're not going to see them till you practice, and I'm not going to sit here and tell you the 14,000 other options. I'm going to give you a basic general one. So the price is moving in the sell direction. We scaled in a little bit more, scaled in a little bit more, maybe scaled in a little bit more, and we scaled in enough to where that sell trade, which is against the original direction, is now more profitable. It's in the blue than we are in the red, the negative buy trade. At that point, I just get the hell out. Okay, I was wrong. I'm going to get out at break even. I might even get out with a tiny loss. Let's say I had a $100 drawdown to begin with, and I'm like, you know what? I'm going to trade this in the opposite direction and where the market's telling me to go. And I'll get out, instead of a $100 loss, I'll get out at a $25 loss. It's just move on. You were wrong. Like, that's it. That is the game. That's how you learn trade management. You have to practice. This concept of I entered the market when it's horrible is not real. This concept of I entered the market when it was perfect is not real. It's never horrible. It's never perfect. It is moving. The price is reacting. And who even knows why? I don't care. I don't have any indicators. I have a skill set. It's a video game. And what's cool about this, I've been doing this for nearly 10 years now. What's cool about it is I can blow demo accounts and practice 24 hours a day if I want to. It's insane. It's absolutely insane, the level of skill set that you can earn by a little bit of practice. Now, here's what's interesting. You're like, oh my God, Terry, is this going to take me 10 years? You know why it took me 10 years? Because at least for the first six or 8 years, I listened to all of the idiots on the internet that said, don't risk more than 2%. Enter here on this candle pattern, set a tight stop loss, put your take profit up here with at least a 2-to-1 ratio. What a bunch of parroting, mind virus ridden idiots. Now, do I sound like a pompous ass saying that? If I do, then I'm not for you. But real talk, it is about having the skill set of getting out of something you didn't want to be in. Here's what, let's talk negative for a minute. Let's talk negative about someone who comes in and they see my very successful winning system. It does really, really well. You know what they do? They lull into complacency. Man, this thing is just winning and winning and winning. How many times have people come to me and started with a few $1,000s and then lost it all overnight? Why? What they did was they came in, oh my God, this is a really great system. Up the bid. This is really great. Up the bid, take more risk. This is really great. Up the bid, take more risk. And then you get a currency pair that just runs hard. You didn't have there, of course, it ruins your account. But one of the things that you didn't have, you didn't practice all this time while you were making money, you didn't practice on how to get out of something that might be bad. What's the best way to get into something bad? Trade. Just enter a random trade. Right? Here's a good way to start. Open up a $3,000 demo account. Don't give yourself $100,000 unless you have that kind of money and you want to trade that. Open yourself up a $3,000 or $5,000 demo account, something small. Usually about 3,000s where the demo accounts start. Open that account up and get into a routine. I did this. I still do this. $3,000 account. I get up. I'm having some coffee. In fact, I'm having some coffee right now. I open up my demo account and I just literally randomly pick a currency pair and I do a random buy or sell at a realistic lot size for my account. What's realistic? One that first is commensurate and equal to your skill set. I can bid a hell of a lot more than you if I can manage a trade. So bid something realistic. Now, if you're practicing, sometimes it's fun to bid outrageous. So things can and will go against you really fast. Really fast. That's fine. So you open up that demo account every morning. Let's say you have coffee every morning at 9 a.m. or whatever your schedule is. But I have coffee every morning, right? Let's say 9 a.m. I open up my account, do a random trade, and just shut it down. Go about my day. The next morning I wake up, I open up that demo account, and I look at what that trade has done. And it's as simple as this. If it's blue in profit, click, I take the profit. If it's red, I look at it and I go, how much red is it? Or maybe I'm like, it's red, I'm going to hedge. Now, there's a couple options. Let's kind of practice on demo, but also think about live money. So let's say I wake up and it's a live account and it's in the red by $10. You know what? I was wrong yesterday on that trade. Click, I'm out, $10 loss. We'll make that up. We'll make that up. But let's say, as I said, it's red and red enough in enough drawdown where you're like, you know what? I was wrong about my original entry. You're never going to have anything that tells you the right entry. It's either you're in the market or you're not. The right entry is the one that you place. The wrong one is the one that you don't. So you wake up 24 hours later and it's a couple $100 drawdown. You're like, well, I was wrong about the direction, right? And I could go very deep on this. I could get all technical, but let's just keep it basic. Because once you learn the basics, you'll go, well, couldn't I have set a take profit? And what happens if it was $500 in profit overnight, but then the price pulled back? I'm like, huh, interesting. So maybe you could learn to potentially set a take profit. Anyway, let's not do that. Let's just enter a trade. So we wake up the next morning, 24 hours later, it's a couple $100 drawdown. I will go ahead and go, now I have an opportunity to manage this trade. I'm going to hedge. I place an equal and opposite order. And then I just walk away. The next morning, I have a buy and a sell. And potentially, one of them's going to show me, as long as I didn't do them so far apart, right? Like if you get into a trade on a $3,000 account, and the next morning you're $2,000 in drawdown, first off, you bid too much. Lesson learned. Second off, you better hope you have the skill set to get the hell out of this. So when you wake up, and let's say this is, 2 mornings later, you're in a buy and a sell trade, the market's going to show you right on your mobile app, right in that demo account, which way it wanted to go. One's going to be red and one's going to be blue. Okay. Let's go ahead and add a little bit to the blue side. Now, mathematically, you can sit back and figure out if it keeps moving in my direction or in the blue direction, in the profitable direction. I could bid a certain lot size that if it moves just a little bit more in that direction, that side becomes more profitable than the negative side. Pretty easy. Pretty easy. And what's interesting is that concept right there alone is well into the 80-90% of the skill set in and of itself. Your ability to, I might call it, stop the bleeding. The bleeding is drawdown, unrealized loss. So let's stop that. Now here's what's going to happen. Let me give you a couple scenarios, and then once you see them by practicing this way, you're going to be able to ask me and the community educated questions. Here's an uneducated question, which I'll completely field. An uneducated question is, how do I get out of this trade that's went completely against me? I'm like, yeah, it's, watch this video or listen to this audio type of thing. So the real question might be, here's the exact scenario I'm in. Here's what I've done. Here's what I'm seeing. What are some things I could do to handle this? That's where my value's at. Does anyone ever ask me that? They never do. The only thing I get is, oh my God, we've been making all kinds of money all year, and I just must have entered the market at all the wrong time because this trade's going against me. Have some basic rules. Now, I apply basic rules, and I get better and better, and we evolve. I apply basic rules to the feeds that I give out. But people trade them. They trade the full algorithm and trade in pairs that aren't in some of the custom feeds that I have, like the 10 pip hybrid or the one profitable pair feed. Maybe they're trading something different. I'm like, well, you probably shouldn't let a trade run 20, 30, 40 trades against you and then go, what do I do now? At that point, when you hedge, people usually lose their ass because they hedge at the turnaround. They've waited so long emotionally that when they do hedge, it's out of pure desperation. They have no margin level percent left. That's the one thing I look at. I'm not going to talk about that today. I know people are, emotional about drawdown. But, of course, you can pay attention to that in your periphery as you're doing this practice. But there's nothing more for me to add to it other than you practicing what I just said and then bringing custom specific scenarios to me where I say, well, I typically can pick out how you let it get so wrong. Maybe your rule set on the front end is a little too loose. I'll give you an example. One of the rules that we've evolved into with our trading is the 5-5 or get out rule. 5 trades deep on a currency pair. Now I need to think about getting out. 5 days on a currency pair. Now I think I need to think about getting out. And getting out means this. It doesn't just mean exit it, take the loss. It could mean that. Let me give you some scenarios. Let's say we're in 5 trades deep on a currency pair, and it's day 6. So we held on to it all last week. Now it's Monday. I'm going to look at that and go, you know what? I've had enough of this. It's in several $100s of drawdown, so I'm not just going to take the loss. I'm going to hedge, and we're going to see where this thing goes. That does not mean that you wouldn't hedge and then it immediately goes in your original direction. You can get out of your hedge at a loss, let that trade continue, and potentially there's a lot of different outcomes there. You could get out at a $50 loss and have a $100 profit on the other side, and you're still $50 up. You could get out at a loss, and on the other side, when it takes profit, you're at break even. Or you could get out at a loss, trade goes in your original direction, and you get out at a little bit of a loss. A lot of it is just reactionary in the sense of, are you doing it quick enough? So 5 trades, 5 days. Here's another scenario. You could be in one trade. We've seen this happen recently. One trade. You hold it all week. And on Monday, you look and you're like, I'm still in that trade? This thing's going nowhere. What was it? You entered a trade and the market wasn't favorable. No big deal. No indicator was ever going to tell you that. No amount of future telling where you scroll back and go, well, look at this pattern. It's all bullshit. You're either in the trade or you're not. You're either managing it or you're not. You're either getting good price action in the direction that you chose or you're not. That's it. So went into one trade the previous Monday, held it all week. The following Monday, day 6, you're like, I'm still in this trade. And it's $22 drawdown. Get the hell out. Get out. Get out at the amount that doesn't affect you. I don't care if it's $22 or $50 or $300. Depends on your account size. I've absolutely looked at stuff and went, man, I've been extremely profitable this month, but this trade is going against my rules. My 5-5 or get out. It's going against them. I'll take a $300 loss. I was up, $4,000 for the month. Cool. Because what you don't know is when they're deciding to manipulate something. And all of this stuff is manipulated. So a lot of times an indication of manipulation is a trade launching and then there's no volume in the market at all. Why? That's called you're getting suckered in. You're getting suckered in. It's like there's no movement. You're like, this one person says this is going to go up. The other person said this is going to go down. You're typically wrong. You're typically wrong, especially if you're using indicators and price action and all this bullshit that you hear on the internet. So you could just get out. You could get out on day 6. And when I say get out, another option is, like I said, we hedge and we trade against the original direction. Now, here's something I do from a very technical standpoint. The 5-5 or get out rule. Let's say I've held 5 trades on the same currency pair. I'm on day 6. There's enough drawdown to where I'm like, okay, I'm going to hedge. You know what I do? And this is what I apply to the system. You can do this exact same thing if you learn it, if you understand it's a skill set. So here's what I do. Got 5 trades. I'm on day 6. There's enough drawdown. I want to get out. I'll hedge it, hedging an equal and opposite. So let's say you're in 5 trades and they're at a total of $2 lot size. So you place an equal and opposite order at $2 lot size. So now what you've done, if you've locked in that drawdown, let's say you've got $200 drawdown. No matter where the market goes, you could hold that trade forever. It will be $200 drawdown. Yes, it will increase a little bit if there's fees on one side or the other, swap fees and all this stuff, but it will maintain that equilibrium forever. That gives you some breathing room. And you know what I like to do? In my experience, that trade has no price action on it. I'm not going to try to take that trade, that currency pair, and get the hell out of it with itself. I'm not going to trade itself. There's no price action. There's no movement. All I need to get out is enough profit at a minimum to break even. So what I've been doing, and what you might call my recovery system, let's say I'm in AUD/JPY, and it's just, I had to hedge because I'm $200 drawdown. It's just frozen. So I'd lock it in with a hedge. I very much open up my margin level percent because that's what I look at. How much margin level percent do I have? I don't necessarily stare at the drawdown. I know everybody does, so that's why I kind of talk about it more. If you were inside my head, I'd never even say the word drawdown other than talking to somebody because I know that's what you look at. But I look at margin level percent. So it's just a much better indication. So what I do, and I said, what was it? AUD/JPY, that you're in this trade, you've locked in the drawdown. You know what I do? I'm like, first off, there's not enough price action. Typically, if that pair is just locked and frozen and doing nothing, there's no price action on it. I'm not going to use it to trade against itself. I'm going to go use another pair. I like to use GBP/USD. You could use anything you want. There's no magic in it. So I use GBP/USD, and I use a robot that does really, really well until it doesn't. So when I say until it doesn't, that means I don't use this robot all the time. It's really good. So the robot's really, really good. I turn it on. It creates $200 profit. I get out of the $200 drawdown, which I locked in, and I move the hell on. Now, what I just described to you there is an evolution that's happened over time. I think at this point in my trading, that is the best way to do it. Yes, we've used a recovery bot in the past, but the major fallback, the major kind of like bad part of that is that If you're stuck in a currency pair that's not moving and you're trying to put a robot on the chart that's going to trade that currency pair that's not moving, like how much sense does that really make? Certainly, I'll tell you, because I just want to be thorough, if I use that, I'm going to try to get in early. I'm going to try to get into recovery early. No one does that. Everybody's in recovery when it's just way too far and late. And typically, that means the currency pair you're trading, you probably shouldn't use it to recover itself, to recover the losses or the potential drawdown from itself. Use another pair. That's probably one of the smartest things I ever came up with. Will it always work? Ain't nothing always works. But if you have this rule set that I'm telling you, and you practice trade management as I'm telling you, go back and listen to it. I know I've given you a lot of words. I didn't make it very linear, but the information is there. If you can perceive it, if you can hear it, this type of real talk will get you to where you want to be. One of the funniest things I find in this market is that when I talk real, I get a bunch of people that quit because of their perception that it's supposed to be another way. What other way? The one that they thought it should be, that was easy. It can get pretty easy. It's easy for me. Do I still take a loss here and there? Absolutely. Of course I do. Am I losing entire accounts because I sit there and watch a currency pair go against and against and against and against? I've done it in the past. Absolutely. I'm no different. Where I'm different is I don't quit and I evolve. I take a gut punch. I walk away for a few days and I go, what could I have done better? Basically, it's all the things I just told you. All of them. All I would ever do is go in deeper on everything I've already told you. So I hope you find this valuable. I hope at a minimum, this spurs your creativity and your thought process and you go, interesting. What about this? What about that? You need to start asking specific questions inside of the framework that I just gave you. I just gave you a framework. Here's what I know is going to happen. If you go practice that, enter a random trade next morning, either take profit or hedge or take the loss because it's just gone nowhere, right? Inside of practicing that, you're going to have a myriad of scenarios where you go, hey, how would I handle this? Or this happened overnight, which I didn't expect, and it's not inside of this framework that you talked about. That is what I want to talk about. I want to talk about those odd scenarios because that's how I evolve and learn. We've seen stuff every year for the last 3 years that I've never seen in my life. I won't even bore you with what they are. But that's how it works. The more you're in there, the more you're playing, the more you see, the more you can alter your rules and your trading to get as profitable as you want to be. Your profit is simply a result of your ability and effort to practice and not quit. That's it. So real talk, I appreciate you listening. I hope this spurs on some questions or at least motivates you to start practicing this stuff. That's it. I'll see you later.